What's going on, guys? Today we got a great episode with John Pompliano. In this conversation, we talk about Bitcoin. Why is the price going down? What's going on with the Federal Reserve? Where the pressure from the White House is coming? And do I think that Jerome Powell is going to bend the knee, wave the white flag, and eventually cut interest rates? On top of that, I make a prediction about the next 10 years of the U.S. economy. Let's just say I call it Why More Light. And I think you'll understand why at the end of this conversation. Here's the latest episode with John Pompliano. All right, John, what's the first topic?
All right, let's talk Bitcoin price. It is down. What is going on with the Bitcoin price? Why is it at 110,000?
Well, because there's more sellers than buyers. Easy explanation, obviously. But look, I think that there are two different aspects that are at play here. The first is any time that you look at the historical seasonality of Bitcoin, the end of August into September, not a good time for Bitcoin. September is actually the only month of the year that historically is negative. All of the other months, sometimes they're big months up, sometimes they're small months up, but September is the only month that historically is down. So it's somewhat to be expected. The seasonality is here. Now, also, why does it start in August and go into September? Well, what happens in August? The running joke. Everyone is on vacation. They're all somewhere else. They're not in front of their screens. You see this in the stock market, you see this in Bitcoin, et cetera. So I think that's one piece of it, is definitely that. The second thing is that as you look at the legacy or the traditional finance world, there's a lot of uncertainty still. There's a lot of speculation that's going on. Some people are trying to figure out what's going to happen with interest rates. Now we got a little bit more clarity, given that Jerome Powell has come out and said that he's going to likely cut rates in September. But I still think that there's a lot of folks who are saying, what are we going to do with our tactical allocation? If we have uncertainty, maybe we're not going to put as much money into the market as we previously thought we were. So what's interesting is Bitcoin is going down at the same time. The S&P has been going down over the last week or so, right? This is a thing that is a broad market pull down or a kind of resetting. Now, the reason why I think that's important, maybe the biggest takeaway from this, is what you don't want to have is you don't want to have Bitcoin's price go from $69,000 in November. It was $69,000, I think, on November 1st of last year, all the way up to, let's say, $150,000, which I pretty much have been saying I could see that happening in this bull market. If you just get a straight line there, then what ends up happening is you're probably going to get a very big dump on the other side, right? The bear market's going to be pretty brutal. So instead, what you want is you basically want these advancements in price. You want some sort of correction and resetting, right? You want to wipe out some of the open interest and some of the leverage in the system, kind of reset at a lower price, and then move up after that. So I think that's what's happening right now. I don't know where we'll kind of end up. Is 110,000, the bottom, 108, 105, 112, like somewhere in this general range. I think that we are going to reset, and then that gives us the ability to move back up. And so you can almost think of like setting a foundation of the price. All of the conditions become much more attractive and we go up. What I don't think people should expect is some like magical fast recovery. Remember, September on a seasonality basis is usually down. So I'm not saying it's going to be down this year, but I am saying that you should have tempered expectations going into this. And then the other piece is there's a lot of buying coming. Like, you ever heard of, people being like, what was it? The British are coming. Remember Paul Revere, right? He was running from house to house on his horse saying, the British are coming, the British are coming. The Bitcoin treasuries are coming. The Bitcoin treasuries are coming. Tell your friends. All of them are about to get access to their capital, and they're going to start buying in the market. And so it's billions of dollars collectively that should be buying Bitcoin. Now, there is not as simple of an analysis because some of those dollars are hedged. So when they put on the Bitcoin exposure, their investors are then putting on a short Bitcoin spot exposure. And so they can be kind of negated dollars. But I do think that as that capital starts to flow into the market, you're going to see a lot of people get very excited because there's going to be continuous announcements of people buying Bitcoin, right? Which kind of gets people excited. It's hitting the news. It's driving some FOMO to it. But the second thing is that if there's more buyers than sellers, the price should start going back up again. And so I think that this range that we're kind of in, call it 125 to maybe 110, will kind of hang out here for a while. But as we see these buyers come into the market, as we see the interest rate cut in September, like all of these components are going to feed into Bitcoin. I do not believe has topped in any way for this market cycle.
When does Bitcoin become uncorrelated with the global money supply, right? Obviously, everyone's seen the charts, the M2 money supply going up, and then Bitcoin's correlation with that. But if stocks are going to go down, Bitcoin's most likely going to go down because it's just less liquidity into the market.
Well, there's two different things there. So like Bitcoin's correlation to other financial assets and then Bitcoin's correlation to the M2 money supply. So Bitcoin's correlation to other assets, depending on what the asset is, sometimes it has high correlation. There are times where Bitcoin has a much higher correlation than normal to, let's say, tech stocks, right? If Nvidia is going up and Facebook's going up, then Bitcoin's going up, right? And vice versa. But there's also times where Bitcoin's actually very non-correlated. I mean, there was a very long period of time where Bitcoin's correlation to stocks was like 0.15, right? So if you think of 1 being high correlation, -1 being negatively correlated, so if that goes up, this goes down, and 0 is basically non-correlated, right? So 0.15 is actually pretty close to non-correlated, very attractive for people to put a non-correlated asset in their portfolio, especially when it comes with a high Sharpe ratio and all this stuff. So I think that depending on the market conditions, depending on the time, the correlations change depending on the asset. So at times Bitcoin has been very correlated, at other times not. It is higher correlation today than it was 5 years ago. It makes sense, right? Think about it from kind of a just common sense approach. Okay, if I am an individual and it is 2015 and I'm a crazy person on the internet, frankly, that's all what everyone was. I'm going to take as much money as I possibly can. I'm going to put it in Bitcoin. Bitcoin's the only thing. There's no correlation. I'm not like buying stocks and buying Bitcoin. I'm not selling stocks and buying Bitcoin, right? I just own Bitcoin. Like that's it. It was just crazy people. And I say that affectionately because like that was me, right? I didn't have any other assets to the most part. And so it was just like, there is no correlation because we all are just in Bitcoin. Now, fast forward, what do you see? Big financial organizations, hedge funds, et cetera. Now Bitcoin is becoming a part of their portfolio. So as Bitcoin becomes a part of the portfolio, now they do have other assets. So they begin to act, well, are we risk on or are we risk off? Are we allocating or are we divesting, right? Now there starts to be more correlation between the assets because the people holding Bitcoin has changed and they think in a more holistic portfolio construction manner. And so Bitcoin will naturally get put into that and start to be part of these similar types of trades or these similar types of positions. So I think that's important. Now you asked about global M2 supply, and I think this is very fascinating. Lynn Alden, Sam Callahan did a fantastic study, it's probably 2-3 years ago. Bitcoin is the most sensitive asset to global M2 expansion or contraction. So a lot of assets move. If global supply, money supply is increasing, then these assets go up. If it's contracting, then these assets go down. Bitcoin just happens to be the most sensitive, which means that for every net unit of growth of global M2 money supply, Bitcoin will move the most for that growth, right? And so if you want to make a bet on global M2 money supply growing, then you would buy Bitcoin because it is the thing that will express that impact the most, right? So that makes sense. You've also probably seen these charts of like M2 supply goes up and then Bitcoin kind of follows it, right? Well, what's happened in the last 2 to 3 weeks is that M2 supply had gone up, Bitcoin went up a little bit and now it's been going kind of sideways. So there's two schools of thought. Either one is that gap's going to close where Bitcoin will accelerate and will eventually get to that M2 money supply, or maybe it's broke now. Maybe, quote unquote, this time is different. I do not think that this time is different. But I also think that as soon as everyone starts to think something is true, that is when you should start questioning it. And so the second that everyone, including myself, sharing these charts saying, hey, look, this is what happens, right? Like this has historically happened. You always have to think probabilistically and say, well, maybe the probability of this happening for the 19th time maybe a little bit lower than it was on the 3rd or 4th or 5th time, right? And so I do think that Bitcoin is still very susceptible to money supply growth, but I now see, well, there's a fracturing of capital going into Bitcoin, right? So think about it. It used to be you could buy Bitcoin. That was pretty much it. Okay. Well, now if I want Bitcoin exposure, I can buy the ETF, which goes and buys Bitcoin. So you're still getting the exposure to Bitcoin. Dollars are flowing into Bitcoin. Bitcoin's price still there. But what if I want to now buy, let's say, a Bitcoin treasury company? I'm getting underlying Bitcoin exposure, but I'm doing it in kind of this levered vehicle. And so there's some fracturing. Not every single dollar that goes into the Bitcoin treasury company is going into Bitcoin. It's trading at a premium. So there's got to be, somebody's paying the premium, right? So if you pay, let's say, a 50% premium, that means that for every $1.50 that you're investing, $1 of Bitcoin is actually held in the treasury. That's 50 cents worth of demand that technically is demand for Bitcoin, right? In this unique type of structure, but it's not going into Bitcoin. So that is being siphoned somewhere else, right? It's having less of an impact. Then if you go and you take a look at, well, let's say the miners, similar type of thing, right? If you start to look at now, there are these funds, there's like real estate, Bitcoin funds, et cetera. Like there are a lot more opportunities to play Bitcoin today, and they're not all dollar for dollar. And so I think that is where you're starting to see some of the, yes, increased interest, but also there's fracturing of the monetary energy going into Bitcoin. A lot of it's still getting into Bitcoin, 70K. Now it's, 110, 120, whatever on a given day. But it used to be that 100% of that demand went into Bitcoin, which caused these massive explosions in price. Now what you're seeing is Bitcoin's going up, but so are public stocks and these fund structures, et cetera. And so I think that it's very important for Bitcoiners to not get complacent and to constantly try to pay attention, talk to people, learn, listen to podcasts, read all the great work that people are putting out, and understand that like the market is changing, the market players are changing, the market dynamics are changing. And that doesn't mean that the overall thesis of Bitcoin is changing. It just means that the severity, the speed of these moves may be impacted. And the more you understand about those changes, the more that you can start to understand about how Bitcoin should act in these, kind of time periods that people are paying attention to. Today's episode is brought to you by Zappo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Zappo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now, here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Zappo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Zappo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Zappo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to zappobank.com/pomp to learn more. That's XAPOBANK.com/pomp. Go check them out at zappobank.com/pomp today.
How much of every vehicle that you've mentioned, the ETFs versus the treasury companies versus buying spot, like how much of Bitcoin's price is in relation to just market participants, right? Like on a given day, you are going to have buyers and sellers, regardless of the asset. Like there's never going to be a day where it's like, oh, we only bought Bitcoin, everyone on the planet. But how much is it reliant, Bitcoin's price and price appreciation? Like all these vehicles seem to be reliant on the price appreciation and new market participants and new money flowing into the asset. How do you think about the relationship between all of these products and really Bitcoin's price and like where it goes from here?
So if you look at it from the perspective of the treasury companies, the ETFs, et cetera, right? They all have different quote unquote business models. So if you think about an ETF, if let's just say an ETF has $100 worth of Bitcoin, and they charge a 25 basis point fee, right? Now we're going to start doing public math here. So you got to be careful. But that would be the equivalent of 25 cents, right? So the ETF is going to earn 25 cents for every $100 that is sitting inside of their ETF. Okay. They don't care if more people come in or not. They're going to make that 25 cents off of the $100. Now, would they like that $100 to become $200 of Bitcoin, whether it's through net new inflows or the price of Bitcoin appreciating? Of course, right? Because now 25 basis points on $200 is 50 cents. They doubled their revenue, right? So yes, it is beneficial, but it is not dependent. Their success does not depend on it, although they would like it. The Bitcoin treasury companies, they need to raise more capital to buy more Bitcoin, right? That's part of the whole thing. And they need to do it in an accretive manner. So they need the NAV premium to be high in terms of if your company trades at the amount of Bitcoin that you have in your balance sheet, it's not really a huge advantage to raising more capital to buy more Bitcoin, right? Yeah, Bitcoin can appreciate, there's, kind of some edge cases, but the whole value proposition here is if the company's equity trades at, let's say, 2 times the value of what's in on NAV. So if I have $100 of Bitcoin sitting on the balance sheet and my stock is trading at the equivalent of a $200 market cap, well, if I sell shares and I buy more Bitcoin, I'm selling something that's worth 2 times the value that's sitting on the balance sheet. And I'm using that additional capital to go buy more of that same thing on the balance sheet. And so I should be able to get a 2 times multiplier, right? So for every $1 of Bitcoin I buy, I'm getting $2 of market cap. And as long as that holds, you can play this game, which Saylor has done a fantastic job of. So I think that is a very different, kind of dependency. Again, not dependent on Bitcoin's price going up, but dependent on that premium being there. So you have to go vehicle by vehicle or strategy by strategy to understand what is it that each thing is reliant on or really needs for it to work. What I think you said, though, about being dependent for Bitcoin's price going up, well, of course, if let's say 100 million people around the world hold Bitcoin and there's no net new demand, well, Bitcoin's price shouldn't go up, right? It shouldn't go down either, right? If 100 million people are just holding it and they don't sell and there's no new buyers, then Bitcoin's price is just, what it is. Where Bitcoin has really benefited is the finite asset. And there has been some that have been lost and destroyed and unaccessible, et cetera. So as net new demand has come in, a finite asset, well, the only thing that can move is the price. So naturally, think about it as if you have, let's say you have a car, right? And you hold that car and you bought the car for $30,000. And somebody comes to you and says, well, I'll pay you $28,000 for it. You'd say, well, I'm not going to sell it for $28,000. Like I just bought it for $30,000. Okay, well, I'll pay $30,000 for it. You'd say, I need the car. Like I bought the car, right? I need it. Okay. Then somebody says, well, I'll pay you $32,000 for the car. So, well, that's a little bit more interesting, but for $2,000, I want to hold the car. Not enough money. Then somebody shows up and goes, that guy's a moron. I'll pay you $50,000 for your car.
Here are the keys.
Well, you're like, yeah, I just bought it for $30,000. I'll sell it to you right now, $50,000, right? So there's a price at which you are willing to part with your car because economically the incentive is so large that you're willing to sell, right? Same thing, now go to Bitcoin. Let's say that you bought one Bitcoin for $50,000 and somebody shows up and says, well, I'll buy it from you for $55,000. There's a lot of people in the world who say, well, I need this. I need Bitcoin to protect my economic value. Why would I sell it to you for $55,000? That's crazy. I just bought it for 50. It's only 10% increase. But if somebody shows up and says, well, what if I'm willing to pay $120,000 for your Bitcoin? There's some people who say, you know what, I bought it for $50,000, $120,000. I might, you can have some of my Bitcoin, not all of it, but maybe some of it, right? And so as the price moves, the price is unlocking supply, right? That is held by holders. And so as you see the price go higher, you should see more supply come into the market because they're getting paid more money for the asset that they hold. And you see this in every bull market. Now, naturally, as you get to the other side and Bitcoin starts to crash, then what happens? Now, all of a sudden, people say, wait a minute. I don't want to sell Bitcoin. I want to be buying Bitcoin because now Bitcoin is at a lower price. It's more attractive. The economic incentive is for me to go buy it up. Now, of course, the people who are usually selling in the bear markets, they're the people who are either new, so they don't understand it. 2 is they're over-levered. They are a forced seller. There's some issue, right? That is why they are selling it. They may be long-term believers in Bitcoin, but they got to sell. And so naturally, there's a transferring of Bitcoin from the people who mismanage something or a forced seller into the hands of the people who are prepared, have capital, and have conviction. And so then we go through the cycle again, right? At some point, we exhaust all the sellers. People have now hold the Bitcoin. They are long-term believers. They're not willing to sell. So in the last cycle, if you bought Bitcoin under $20,000 in the bear market, you're not selling it because you have a viewpoint that is worth a lot more. And so now all of a sudden, if Bitcoin's trading at $120,000. For every Bitcoin you bought under 20, you're making at least $100,000. There's a lot of people who say, okay, I'll start giving you my Bitcoin, right? So I think that's the market dynamic that's at play here. And so the success of Bitcoin is ultimately hand in hand. It's kind of a chicken and egg. The more people that want Bitcoin, the more valuable it is from a perspective of price, right? Like the price goes up. But also as the price goes up, it serves as the marketing campaign for Bitcoin, right? Bitcoin has no CEO, no board of directors, no marketing budget, no marketing team. There's no corporation. There's no kind of centralized planning, et cetera. So, well, what happens when Bitcoin's price goes up? The media starts talking about it. You get text messages from your high school friends. Hey man, what about that Bitcoin thing? Is it a good time to buy now, right? People start explaining it. I always know that it gets a little crazy whenever you see the Uber drivers. They got one of the apps up on their phone and they're checking their stocks or their crypto and say, okay, we're getting close to a top. If you see people who usually don't pay attention to finance start talking about it, younger people, a great signal a lot of times I found is moms, right? Because moms I think are a lot of my friends' moms. They don't pay attention to finance on a day-to-day basis. They pay attention to what their kids are paying attention to. So if their kids start talking about it, then the moms start talking about it. And if all of a sudden you see the moms saying, yeah, that Bitcoin thing is working, or some moms, that Bitcoin thing, right? Like you get like the whole thing that they're looking at it and they kind of sort of know, but they really don't understand it. What you're really measuring is like how far has the media exposure, the price going up sends a ripple. Like you ever if you throw a rock into water, you know how there's like ripples of the water? Well, when price goes up, that's the rock hitting the water. And then what you're trying to measure is like, well, how many concentric circles out has this news hit? And if it has reached a lot of people who are on the edges of those concentric circles, that means the price had to go up a lot, right? You needed a fatter rock to hit the water rather than a little pebble. And so when you start to understand some of these market dynamics, it doesn't give you a perfect like, hey, this is the top, this is the bottom, whatever, but you can just directionally understand kind of where you are in these cycles. And what I have found is it doesn't change my opinion on should I sell? I ain't selling, right? Unless I got like a tax bill or something, my plan is to take whatever Bitcoin exposure I have, give it to my kids, my grandkids, et cetera. So what it does do is it starts to influence the rate at which you buy, right? You may dollar cost average every week, every month, every day, whatever. And then at certain times, you may want to speed it up because you feel like Bitcoin is trading at a lower price. So that's kind of how I think about this idea of like Bitcoin going up and its impact on various parts of the market.
It's funny because like, I have a decent tap on the younger generation. I'm definitely not in high school, but I still know a lot of younger people, much more than you. But it's funny because they never.
You call me old?
No, not at all.
I just dropped. Did you hear that rock lake ripple?
Bitcoin, I heard all.
Did
that.
you hear?
Yeah.
Like that was off the dome. Like,
but it's interesting because no one ever like most of traditional finance is probably boring to the average person, right? Bonds and fixed income and all their mutual funds. Like that sounds boring. What's interesting is making a lot of money extremely quickly. And that's what I think.
Time-tested idea.
But those are the...
Let's just get rich quick.
But that's what I think attracted people to crypto was that like, no one's texting me about Google stock, right? No one's like, oh, Google's up 7% today. Like, what do you think or whatever. But that's why I think crypto is super interesting to the young generation is because they want to see that price appreciation. And then their moms get involved, their dads, their brothers or sisters.
Anyone text you about Open Door?
Yeah, I did get a text this morning about Open Door.
Okay, so if you think about that, right? Again, it goes back to no one would be talking about Open Door unless the price was going up.
But same thing with the meme retail stocks.
100%. Bitcoin. No one's talking about it until the price goes up. So there's this weird dynamic of there are consensus trades and contrarian trades, right? And the contrarian trade is you buy something when it's not popular. And then the secret to a contrarian trade or a contrarian idea is you need it to transition from a contrarian idea to a consensus idea. You don't want to be on an island forever by yourself. You go hungry. What you want is you want to discover the island and eventually everyone else is like, yo, that island's cool. Let's all go there. And you're the guy who built the hotel, set it all up like, hey, here comes everybody joining the party, right? That's where the returns are. So you want to be early, but eventually you need the idea to become consensus. And so that is what Bitcoin has done. Many other things is it starts off as this thing that's very unpopular. Nobody cares about. People even question whether it's legal, all that kind of stuff. And then it transitions. It is now a consensus trade on Wall Street. Like Larry Fink is out there talking about Bitcoin is real. Bitcoin is high value. Bitcoin is this. I'm a believer. All these things. You went from the cypherpunks to Larry Fink. That's your contrarian to consensus transition, right? Now, what you have is you have a mainstream asset. And so the mainstream asset, again, it goes back to think of it on like on a horizontal basis. When you start with the cypherpunks, they are amazingly intelligent nerds, right? Okay, very small group, very convicted in terms of their kind of ethos, right? And their worldview. It's just by nature a very small group of people. But Larry Fink, there's a lot of people who believe the same things Larry Fink believes. And so that transition to Bitcoin kind of infiltrating their brains and gaining conviction now means that you have arbed away a lot of the return, right? I mean, Bitcoin has compounded for 10 years. Compounding annual growth rate of Bitcoin for 10 years is over 85%. It's a bonkers number. So all you had to do is buy it 10 years ago, hold it till today, and you outperformed every single hedge fund in the world, according to all the Bloomberg lists. Right? Now, 10 years ago, Bitcoin's price was still hundreds of dollars. It started out at pennies. So it's not like you were the first guy to discover Bitcoin, right? You weren't the first guy on the island. Maybe you were one of the first parties to go and visit that guy on the island, right? You were early, but you weren't first. Bitcoin came out in 2009. So if you think about that, 10 years ago, 2015, it's more than half a decade after it came out. You still could have bought it, held it for a decade, and outperformed every hedge fund in America. Pretty crazy. But I think that is what people are understanding is like the reflexivity of this type of asset when it transitions from contrarian to consensus. Bonkers.
It's fascinating to think how contrarian of a thought that must have been in 2009 or 10.
Well, I know
most of it was probably trading on.
You want to hear?
Like, hey, I think the price will go up.
You want to hear a couple stories? I know people who were buying Bitcoin in 2009 and 2010, or receiving it. Some of them there weren't even exchanges yet.
You know Satoshi,
right? No, I don't know. I don't want to know who Satoshi is. Adam Back. Satoshi emailed him, right? Received it. It wasn't like a we're going to get rich thing. It was like a computer science, like, hey, can we figure this out? So there was no economic, belief of like, oh, if we buy a bunch of this, it's going to be like super valuable. I know one guy in the finance industry, he had shorted the housing market. So he was already rich, right? He'd done very well for himself. And he bought some Bitcoin, but like a throwaway investment at the time, like $50,000, but he's worth, probably hundreds of millions of dollars, right?
It's like a dinner bill.
Yeah, like, well, I don't know what dinners you're going to do at 50 grand, but yeah, like it.
Well, I don't know what dinners that guy's doing.
Yeah, I don't know. Maybe he was going to really cool dinners. But to him, it was like, hey, I don't want to lose money, but I'm not going to miss it if it's gone. Bought some Bitcoin. Then he had a company. Everyone had computers. And so he started to have everyone, when they went home, they were mining on their computers overnight, right? I don't remember the exact number, but I'm pretty sure that he was accumulating the bulk of the Bitcoin at less than $1. I have spoken to this individual. He still personally holds almost all of it. It's crazy to think not only to have the conviction to go do all that, et cetera. Now, again, $50,000 investment if you're worth hundreds of millions of dollars, got it. Using your company's like hardware to mine, a little bit crazier, right? The crazy part is not selling. So Bitcoin goes from less than $1 to $100. You don't sell. It goes to $1,000. You don't sell. It goes to $10,000. You don't sell. It goes to $100,000 and you don't sell. You think that guy, when it gets to $1 million, is like, all right, fine. Yeah. Here you go. No.
At some point, you got to sell a little bit.
No. If you hold from less than $1 to 100 grand, you ain't selling.
Yeah.
So here's the crazy part. Does he really have the money?
What do you mean?
It's basically like an illiquid asset. Sure, you could borrow against it or whatever, but if you're never going to sell it, which means you're never going to use it, then you're basically holding something that's worth something on like your personal financial statement. But it's like illiquid startup equity. Can't do anything with it. It's numbers on a page, but you can't consume it to go buy things. So yes, you can borrow against it. I get it. This person doesn't strike me as the person who's borrowing against it, right? And so if you think about it from that perspective, it's kind of like, if a tree falls in a forest, no one heard it. Did it really fall? If you own something that you're never going to sell, you're not going to use, you're not going to consume anything with it, do you really have that, value? That's a different mindset, because there's not that many people who could have, tens of billions of dollars, based on my calculation, right, of value. Big, I ain't touching it. Which then goes to like Satoshi, I don't know, one of the world's richest people, not touching it. Like we're playing a non-economic game at that point, right? These people aren't looking at it in terms of how much money am I going to make. They have a deep-seated belief in something else. And so there is this threshold at the 10-year mark called ancient coins. Anything over 10 years, call them ancient coins. And obviously, the longer Bitcoin goes, the more people who potentially could be in the ancient coin. Well, there's a lot of folks who are crossing over into ancient coins. One is because Bitcoin became more popular in 2013, 14, 15, right? So we're now kind of crossing over those 10-year thresholds. So there's more potential people who hold Bitcoin from that era that now could be ancient coin holders. But more importantly is the conviction that these people have. When they were first, if you bought Bitcoin at $20, well, maybe it becomes a thing. I mean, how many times is there tweets that people pull up from, way back in the day, and people were like, it hit $8. Oh my God. Right. And then they're like, I sold my Bitcoin. Thank God. It crashed to 5. And you're like, dude,
that guy's sitting there like 120,000.
Like, oh my God, right? So like it just goes back to, you can look in the data and you can see more and more people are becoming these ancient coin holders. And the reason why that's important is because that means that supply is essentially taken off of the market. Now I'll give you another example. It recently came out that Kevin O'Leary, this guy Paul Warshaw, and this guy Shine, Matt Allen, came together and they bought the world's most valuable sports card. Right? I'm not an expert on sports cards, but it's got the logos, it's got multiple players, etc. They paid almost $13 million. I think it was $12.9 million. And in one of the news articles I was reading, I like to read and learn. It says something to the effect of one of their quotes was like, "This will never trade again. They're just never going to sell it." Okay, I called Kevin. Heard his view of it. I called Shine. I said, "Hey, what's going on?" Like, I told him, I said, "Tell me about the auction. Like, that's like high stakes. You got the whole game theory." He explained the whole thing to me. It's fascinating. But that card is now known as one of, if not the most valuable sports cards in the world. You think there's not a billionaire somewhere who'd be willing to pay more than $12.9 million for it now, simply to say I own the world's most valuable sports card? Okay. Well, what if they're not willing to sell? You think someone would be willing to overpay to get them to give it up? So what's it worth now? 2 times higher? But if they're never going to sell it, it's a different ballgame. So I think that's kind of what's happening with Bitcoin now, is there's a bunch of Bitcoin that people hold. They ain't ever going to sell it. It's just taken off the market forever. And they're going to give it to their kids or their grandkids, and they're going to leave a note that says, "I will come back if you sell this." Do not sell the family's Bitcoin, right?
I'd love to see your will.
Nah, listen, this is a cultural phenomenon. Think about India. In Indian culture, passing down the family gold, you don't sell it, right? Same thing I think here is like these Bitcoin families, they're just like, yo, don't sell it. Just hold it. It's going to be worth a lot more. I think that is not abnormal or weird. I think it's actually very rational for people to have that perspective. Today's episode is brought to you by Simple Mining. Have you ever been interested in mining Bitcoin? As a miner myself, I've been using Simple Mining for the past few months, and the experience has been nothing short of seamless. I mine with the pool of my choice, and the Bitcoin is sent directly to my wallet. Simple Mining, which is based in Cedar Falls, Iowa, offers a premium white glove service designed for everyone, from individual enthusiasts to large-scale miners. They've been in business for 4 years and currently operate more than 20,000 Bitcoin miners, including mine. Their electricity is over 65% renewable thanks to the abundance of wind energy. Not only do they simplify mining with their top-notch hosting and on-site repair services, but they also help you benefit financially by running your operations as a business. This approach offers 100% bonus depreciation to optimize the profitability of your investment. Do you ever worry about the completion of maintaining your mining equipment? They've got you covered there too. For the first 12 months, all repairs are included at no extra cost. If you experience any downtime, they'll credit you for it as well. And if your miners aren't profitable at the amount, simply pause them with no penalties. When you're ready to upgrade or adjust your setup, their exclusive marketplace provides a seamless way to resell your equipment. Join me and many satisfied miners who have simplified their Bitcoin mining journey. You can even get started today with the 7-day miner trial. Visit simplemining.io/pomp to get started today. That's simplemining.io/pomp to get started today. With Simple Mining, they make it simple.
That makes sense. All right, let's switch gears a little bit. Jerome Powell, Super Bowl last week, Jackson Hole. What are your thoughts about what happened last week at Jackson Hole and Jerome Powell signaling that in September we are most likely going to see at least a 25 basis point?
You remember when we were little kids and I was 8 years older than you, so I obviously had a physical advantage, and I would come in your room and we would start to tussle. Right. And at some point you'd be like, okay, enough of this. And you would yell for mom or dad and be like, he's bothering me.
100%.
Right. Yeah. Okay. That's what Jerome Powell did on Friday. He waved the white flag. He bent the knee. The public pressure became too much. He just can't deal with it anymore. They just kept going at him and going at him and going at him. He finally, all right, I'll cut rates in September. Now he's going to claim, which he did, that he's cutting rates because of the labor market. Oh, I'm worried about job loss, blah, 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 whatever. What that tells me is people aren't losing jobs. Companies are making more money. So the companies are becoming more efficient. So what he's doing is he's bailing out the humans, the human labor market, he's bailing out with the rate cut, and that's what he's going to blame. That's the scapegoat. But he's saying inflation, maybe it runs a little hotter, but I got to worry more about the labor market than the inflation. What I think is they are miscalculating job growth in America significantly. Give you a good example. In our company, just pick any one of them. We have not hired 2 times the number of employees in the last year that are human. We've hired more than 2 times the number of people, digital employees, AI agents, automation, all this stuff. So what normally would have been humans doing something, we are now using technology. Well, for every agent that's been hired in the American economy, the company isn't paying for them from an expense standpoint, but they're getting the worker productivity of the AI agent. That doesn't show up in the job numbers. So is the American workforce actually bigger? Could it be 50% bigger, 2 times bigger than it was a year ago, if you include the digital workers and the human workers? But again, his job isn't to worry about that. His job is to worry about the humans. So it comes to this idea of like what he sees as weakness actually is probably signaling strength in the economy, that the company's earnings are going up. Facebook, Meta, I can't remember the exact number, but I want to say that they are growing their net income like 20 or 30% year over year. It's a $2 trillion company growing 20 or 30% year over year. Profits.
That's ridiculous.
That's crazy. Palantir said that they are going to 10x their revenue and do it with like 400 or 800 less employees. 10 to 20% of their workforce they're going to get rid of, and they're going to make 10 times more revenue. Does that sound like weakness to you? It sounds like the companies are becoming more resilient, more productive, more efficient, which means they should be more valuable. But his job is to look at job data. So he's not looking at it holistically. He's just looking at the job data. He says, oh, that looks like a little weakness there. Let's cut rates. Now, I like the end result of cutting rates. I think it's complete nonsense that he's blaming the job market for cutting the rates. And I think instead he should just come out and say, hey, rates are too high. I've been late. We should cut. We're going to go ahead and do that. My apologies.
The market clearly thinks that he's going to cut, and
he said he's going to cut.
Yeah.
in uncertain, in as about certain terms as you could expect.
Yeah.
Right. That's the other thing is these guys like just use English, man. Stop with all the nonsense of the like, we're going to be tethered to reality on inflation or we will reevaluate our policy. And then there's some guy who's like, he's got a red tie on. He spoke for 32 seconds. That means rate cuts coming in September, 25 basis points. Like, dude, what are you, a translator? Right.
But you have to leave it up for some uncertainty. Like you can't say we're 100% going to cut rates in September.
You don't have to say 100%. You can say, based on the facts that we have right now, we are likely to cut interest rates in September by 25 basis points. If the facts change, we reserve the right to change our opinion. Done. I saved them a 27-minute speech. Just say the freaking 2 sentences, get off the stage, right? But that's not the game. The game is all stuff. So it comes back to this idea. If you are going to give guidance of the future of what you're going to do, speak in plain English. Just say it so anyone can understand. Because I would argue, here's a good one. Federal Reserve is discriminating. They're discriminating by only sharing their forward guidance of policy with people who have the sophistication and education to decipher the Fed language. You're putting the people in the American economy who don't understand all your big fancy words at a significant disadvantage. Why don't you just use simple language so more people understand what you're going to do? Why is it that you are trying to only tell a certain group of people what you're going to do, but not everyone? Aren't you discriminating against everyone? That's an interesting idea.
You could stretch that pretty far, though. You got to be careful with that line of thinking.
Well, again, the onus is on them. Why are you giving some information to only some part of the market and not to everyone?
That's fair.
Right? So the question becomes, should they be given the guidance at all? Huge debate. But it comes back to this idea of he bent the knee. I'm in your room, you're yelling mom. He finally said enough. Now, he got another big legal fight on his hands. And I don't know how this one's going to go. Lisa Cook, who she's famous now. No one had ever heard of her until 2 weeks ago. Bill Pulte, FHFA director, Bill Pulte, Bitcoiner, philanthropist, overall certified good guy, as we've gotten to know him. He got the FHFA director role. Okay. I remember I saw him on TV. He was like, hey, there ain't nobody working here. We're going to get everyone back. They came back a week later. Everyone was there. I was like, seems reasonable to me. He and his team has discovered that Lisa Cook allegedly claimed that she had a primary residence, got a mortgage, like 21 or something, signed. A month later, in a different state, said, I'm getting another mortgage for a different house. That's my primary residence, signed. She could have moved in a month. But on a different document that I saw get published, she posted the house, I think it's in Atlanta, for rent to other people, and then signed another document saying it was her primary residence. It's fishy. Maybe it's illegal. Maybe it's fishy. I don't know. There's smoke here. So they recommended, I think, for like a criminal situation with the Department of Justice. Trump came over the top. He fired her. She came back and said, I'm not leaving. Ooh, okay. Hold on a second.
Reality show. Get the cameras rolling.
We got the president saying he's firing the board governor at the Federal Reserve. We got the board governor who says she ain't leaving. You can't fire me. Already. We got, we're going to see. Now, I don't know if you want to fight with the president of the United States. That don't seem like a great idea, but okay. Jerome Powell, him and the Fed, I've read two different viewpoints on this. If they allow her to continue to serve as a board governor and the president and the White House is right that she's fired, do they take on legal liability for having someone work at the Federal Reserve who has access to sensitive information when she has been fired? That would be a very big deal. Now, there are some people who say, well, if there's like an appeals process or a court thing, actually, you can't be held liable for anything that happens until there's a final decision. I don't know. I'm not a lawyer. I don't want to be a lawyer. Somebody smarter than me will figure that out. But I think that, again, it goes to show we're now leaving the like Twitter or X wars of like, let's put a public pressure campaign. Now we're in the courts. And the court's going to have to figure this out. And there's a lot of dynamics at play here because the board governors plus Stephen Myron being nominated, like there's a world where the White House, they got their people in the Federal Reserve. The critics will say, well, the Federal Reserve is not independent then. I would argue the Federal Reserve is not independent before. Well, what makes you think that they were independent before? Right? Look at donations to only one political party, really, right? Not most. If you look at the way that they operate, if you look at the secrecy, if you look at when they've chosen to cut at certain times, maybe 2 months before an election. I mean, there's a lot of stuff there. So if they're already not independent, now you're just going to have this pendulum swinging back and forth. Who's president? Who gets to control the Federal Reserve? I actually think that if you're going to have a central bank, you do want it to be independent. It's just that I don't think it's been as independent as people want it to believe. And I think that, unfortunately, it's going to get less independent, if we continue to see this play out. And so I'm watching as a market observer because I think we are watching a chess game play out here between the Fed and the executive branch. I don't know who wins, but I know one thing, rates are going to come down. So everyone could chirp back and forth. What's the saying? Trigger fingers turn to Twitter fingers, right? Whatever. I just know rates are going to come down and the market's going to win. The market is saying we want rates down. So rates are going to come down. And I think that is ultimately investors can pay attention to all the noise for entertainment purposes. Fascinating. You're fired. No, I'm not. Here we go. Let's go to court. Fascinating. The only thing that matters, are rates going to come down or not? Powell says they're going to come down. President says he wants them down. Rates probably are going to come down then. If that's the case, you're going to see cheap money come into the market. You should see a tailwind for public equities. Housing, out for the open army. Housing should see a resurgence in terms of transaction volumes. If your business is benefiting from higher transaction volumes of housing, that might be good for you, right? All these things kind of trickle through the economy. And so it's like macro's back, baby. Let's think through how all these little things interact with each other, try to figure out what ultimately is going to be the end result.
I would love for them to cut rates.
You think so?
I would love it. I think that would mean, in theory, asset prices should increase.
Yeah, look, there is an argument that cutting rates would be great for half the country. There's also an argument that if they cut rates and it's coupled with printing money, we get what we got in 2020, which was a massive increase in wealth inequality, right? And so 50% of the country is not in a great spot. Now, I would argue that that's a education gap more than anything else, but it is what it is. And also, I mean, house affordability, home affordability is a huge issue in America, right?
It costs 2 times as much to buy a home right now than it does to rent the average home.
It costs 2 times as much?
Yeah, I think it just hit another 2 times. Yeah,
that's a huge gap. I don't know what the number is, but if it's 2 times, that's crazy. So yeah, I just think that we are watching all of this play out, and what I would suggest to people is, they have a Gator Light, I think it's called, like Gatorade, right? I think there's something called Gator Light, okay, right? Or they basically take the same Gatorade, but they dilute it with a lot more water, right? So Gator Light, it's Gatorade, but lighter version. I'm going to go out on a limb and predict that the next 10 years of the American economy is Weimar Light. Weimar Light. Weimar, Germany, just the light version. We're going to debase the currency much faster. There's going to be a lot more risk-taking. I'm not predicting hyperinflation, but Weimar Light. And so if you think about that, wealth inequality explodes. Houses become very unaffordable. We're seeing a lot of this stuff. So not Weimar Light, usually a little bit more expensive than the original version because they added water. But a lot of the same things, right?
They're going to sell it to you as it's good for you too.
Of course. Weimar Light isn't Weimar, right? It's just Weimar Light. So that's kind of my viewpoint is like, if you go and you really pay attention to Weimar, Germany, there's other examples around the world, but I think Weimar is the one that's been most studied from an economic standpoint. There's a lot of great books, and just go on any LLM, ChatGPT, Perplexity, whatever, and just start banging out. What happened to Weimar Germany with hyperinflation? What were the drivers? What were the risks? How could it have been avoided? What assets did well? What assets did not do well? Who were the famous investors who profited off of it? Who are the people who got hurt? I mean, just go through the whole thing. What are the policy mistakes? All that kind of stuff. Weimar Light is the way to think about the future of the U.S. economy over the next decade or so.
I love it. All right. Thank you.
All right. That's it, guys. Thanks so much.